טוב, אז שלום לכולם, זה האירוע של הפורום של טאב ישראל, וזה קורה מדי פעם כשיש לנו תכנים מעניינים לערב את הקהילה. כולכם פה מכירים את טאב במקרה, כולכם איכשהו מחוברים לטאב, חברי טאב או מנחים. מה שאנחנו עושים, אנחנו עובדים במספר מעגלים, מעגל ראשון, עבודה של כל אחד עם המנחה טאב שלו, המעגל השני, כל אחד עם הבורד שלו, והמעגל השלישי זה כל חברי טאב בישראל ובעולם, שיכולים מדי פעם להתחבר לתכנים, שמדי פעם גם מוזמנים אנשים שהם לא חברי טאב. את האירוע היום יציג ליאור. ליאור הזמין לאירוע אנשים שגם לא דוברי עברית, ולכן נעבור עכשיו לאנגלית. So I want to introduce Lior. Lior is working with me for about a year now, and we found it, I found what the blockchain industry to be very interested and a lot of curiosity and a lot of things that people don't know about it. So I offered Lior to come and talk to us about it. So Lior, the stage is yours. Please introduce yourself and then take it further.
Thank you, Arik. So today, a little bit about myself. I'm in my training, I'm a programmer. I studied computer science in the Technion. I worked for many years at Jakarta, if you know, a startup from Herzliya, and then a German software company, Software AG. Till around beginning of 2014, I suddenly somehow I got to learn about Bitcoin, and I had like kind of aha moment about what this. I understood that back then more than now it was very shady. People always spoke about it being used to trade, mostly to trade drugs, and which was quite true at the time. But I looked beyond it at the technology itself, which I have to say is very, very interesting, and I would like to explain it a little bit to you in very simple terms, I hope. I will then, I know it's a bit late, I will try to make it as easy as possible on you. You can, of course, ask questions. So I'll start with a really very, very basic rundown of what is blockchain and why it's important. Then I will share a little bit of my experiences of working as an entrepreneur in the blockchain space. I'll briefly touch what I'm doing, what my company is doing. You can, of course, read about it later, but I'm definitely not trying to sell you anything today. I will try to entertain you. I hope it won't be too difficult. Yeah, so maybe without further ado, I will say, let me share my screen. I prepared a presentation. So, is it visible? Do you see it well? Okay, so my company name is Jelurida. Jelurida is a Swiss company, not an Israeli one. Actually, I'm the only Israeli employee. I'm also a co-founder and director. So let's start from really the basics about blockchain. I always like to start with this Apple example. Maybe some people that watch this already saw it. Let's say that I have an apple and I want to give it to Arik. So I have one apple, Arik. I give it to Arik. So Arik have one apple. I have 0 apples. We can look at the apple, see it, count it, feel it, and so on. But what is this apple is digital. If it's an say, MP3 file or video or some document, I can give it to Arik, but save a copy for myself. I can also upload it to Facebook and million people will download it. So tracking digital content is much more difficult than tracking physical content. So what people over the internet are doing is running what we call a ledger, like an accounting book, that I gave this apple to Arik, so I cannot give it to Elisa, okay? Because this will be double spend. Yeah, this will violate the rules of the protocol, okay? And then there is a question, who is managing this ledger, this transaction ledger, and keeping and making sure everything is done correctly and there is no cheating. And usually you see it as a government office or some clearinghouse or some lawyer, or more likely a large internet company that manages this ledger on behalf of its users. The problem is that this creates centralization. Centralization in the sense that these bodies or entities that manage the ledger tend to become very big and powerful. They start to charge their users hefty fees or extort censorship, or in general become inefficient and does not have incentive to give good customer service. So what the blockchain basically says is that instead of letting one central entity manage the ledger, let everyone together, anyone interested in the ledger and the transactions, to manage the ledger together using software, which is based on open source protocol that anyone can look and make sure that there is no backdoor inside it and so on. And in an environment where there are multiple players, hopefully thousands, that nobody trusts each other and everyone re-verify all the actions of everybody else, okay? So this is the essence of the blockchain. It's decentralization, managing a transactions ledger without central management. So how does it work? It all starts from transactions. Transactions, for example, in the case of Bitcoin, which is the first implementation of blockchain, a transaction is sending funds from one address to another address. But transactions can mean other things, as we will see further. Transactions are submitted to the network by anyone who is interested in using the protocol, and they start to propagate until they are packaged into a block. Okay? Blocks are basically containers of transactions. And blocks build on top of each other using digital signatures. So, so they like interlock each other. Each block is tied together to the previous block. So building on top to create what we call the blockchain, where anyone who generates a block sends a block to the rest of the network, and everybody revalidates that all the transactions in the block does not cause double spend, that the block itself is built according to the protocol rules, that blocks are linked to each other correctly, and so on. So blockchain, the structure of blockchain is very good for payment over the internet. And the reason is that we are today used to paying over the internet mostly with credit cards. The problem with a credit card is that each time you pay, you expose your credit card number. And if someone intercepts it, it can pay instead of you. With blockchain, it works differently. You sign a transaction on your local computer using your private key, but when you broadcast the transaction, you only expose your public key. So even if someone sees the transactions that you broadcasted, and of course everybody sees everything that everybody else broadcasts, they cannot pay on behalf of you. They can just verify that you are the one that submitted this transaction. Typically, there is a software that is called wallet that that is typically a collection of multiple accounts where each account is identified by its private key. So, and the wallet is a software that you use in order to operate the blockchain, to see what is your balance, to submit a transaction, and so on. Nodes are typically used to collect transactions and generate blocks. They're usually run on computers that run 24/7 in some cloud computing environment, but not necessarily you can run a node in your basement. And if you heard about mining, because you have a protocol which manages value, in order to give value to your blockchain or token that is used as the base of the blockchain, you need to make it scarce. You need to make it difficult to obtain on one hand. On the other hand, you need to give people incentive to generate this block. So mining is a process that makes it artificially difficult to generate blocks. And the incentive that you get is that each party that is able to mine a new block receives some rewards in the form of some tokens. Okay? So far, I really tried to explain it as simply as I could, but I'm sure there are many. I'm sure not everybody, not everything is clear. If you want to ask a little bit of questions here about how blockchain works, it's a good time. I will later move to possible applications of the blockchain. So, okay, fine. Another thing that people are doing on the blockchain is that now you have a decentralized ledger that where everybody is checking everybody. Why use it only for transactions that move, say, Bitcoin from wallet to wallet? We can also use it to execute code that will be executed by all the nodes in the blockchain, and they will need to agree on the outcomes of some calculation. This is what we call smart contracts, and it's the basis for many interesting applications of blockchain. You can say, you can even claim that using smart contracts, you can enforce all kinds of rules that nobody can break. So you can sometimes hear people refer to it as code is the law. Okay. So let's talk a little bit about what people are using blockchain. So first and foremost, we all know Bitcoin and the value of Bitcoin. Everybody is talking about Bitcoin trading and mining and so on. So payments is a good application. As I explained, it's more secure than using a credit card. But there is a very big problem that because every node in the blockchain has to process every transaction and reach the same conclusion about the outcome, what happens is that there is a scalability problem, because when you have lots and lots of transactions, meaning hundreds per second, it's starting to become a bit too much for this network to to process everything. So blockchain is used for payment, and it's not bad, but there is a big scaling problem. Store of value. Right now, and maybe what fuels the latest hype in Bitcoin and other cryptocurrencies is the fact that in the traditional economy, people can just generate more and more money all the time, which dilutes the holders of the money. So people start to view Bitcoin and cryptocurrencies as kind of a way to hedge against inflation. How good this is, time will tell. Another interesting use case is what we call DAOs, decentralized autonomous organizations. The idea of a DAO is quite romantic. Okay, it says, okay, instead of managing an organization using lawyers to sign the papers and using the trade register to register the company, and somehow enforce the rules using some jurisdiction laws, we will program all these laws on the blockchain, and the blockchain will control all the rules around the organizations, the shareholder agreements, the management of the funds, and so on. It's a very, let's say, futuristic and romantic idea. But there are many entities today that are actually working this way these days without regard. They don't even bother to register a company in some place. They just manage everything on the blockchain using cryptocurrency. Whether it's good or not, whether it's scalable, whether the authorities will even accept something like this, it still remains to be seen. Another catchphrase that you see a lot with regards to blockchain is ICOs. ICO stands for Initial Coin Offering, which is based on the initial public offering of normal companies. In initial coin offering, instead of offering shares to your investors, you offer them tokens. Why exactly people will buy tokens from you depends on the use case of the token, which, again, the use case of the token can be used, for example, to pay transaction fees in a payment network. But it can also be used for applications that require decentralization, like voting and identity management. Anyway, ICO is a way for startup company to raise money by issuing a coin instead of by issuing shares. It was very, very popular back in 2017, 2018, but back then it was a wild west of unregulated coin offerings, which, even though I would say it's a legitimate way to raise money for a startup company, there were many problems with scams and cheating and so on. So right now it's becoming less popular to raise money this way. Another trend that showed up recently is what we call NFT, non-fungible token. The idea here is that you, like you have, think about a piece of art like the Mona Lisa, okay? There is one original, and there could be many copies or numbered copies, and this is somehow managed physically by some museum or registrar or so. But how would you do the same for a digital content or artwork or something that is rare? You want to make it rare and unique in the digital world. So NFT, the non-fungible token, is about registering on a blockchain content that cannot be duplicated. Okay, and you can always prove that you're the owner of the original. It came to light, for example, recently there was some digital artist that somehow sold an artwork for $60 million, or the founder of Twitter registered the first tweet he made on Twitter on the blockchain and sold it to some blockchain entrepreneur for several minutes. It's an ongoing trend. Whether or not it will become mainstream or will just become so niche, it's hard to tell. Then there is another very strong trend today in the industry is what is called Defi, which stands for decentralized finance. And the idea is to take, now that we have tokens and we can trade these tokens on exchanges and transfer it between entities, why not introduce additional financial instruments from the stocks world, like option trading, insurance on options, all kind of synthetic contracts, and loans, where instead of doing it through the normal economy where you have a lot of regulations and so on, in DeFi, you just do it on the blockchain. Nobody can tell you what to do. Okay, it's, as long as you issue a loan, someone is willing to take the loan and really pay the interest. Everything is good. There is a smart contract that somehow tries to enforce the rules. It's a very, it became very popular lately. It's also very dangerous. Of course, there is absolutely no regulation. So again, whether or not this will become a long-term trend or it will gradually disappear like the ICOs, it's hard to tell, but right now this topic is also very hot. Maybe a little bit of cult about Bitcoin. Bitcoin was started by an anonymous person publishing a white paper in 2008, and later issuing the blockchain protocol by issuing the Genesis block, what we call, where people started to create blocks, verify transactions, and get the block rewards. 2010 was in 2010 there was a big day, still celebrated today, May 22, 2010, which is called the Pizza Day. It's the first time that the pizza was bought using Bitcoin. It was bought, if I remember, 2 pizzas for 10,000 Bitcoin or something like that. The person who actually made this payment is still a big celeb in the Bitcoin community. In 2011, Satoshi, the founder of Bitcoin, disappeared. And to this day, nobody is sure who he really is. There are several speculations, but it's still, from time to time, a new person comes and says that he's Satoshi, and then there is a big debate, articles in the papers, and so on. It's also very important because the original Satoshi actually mined the first million Bitcoins or so before other people joined the mining. In the beginning, it was very, very simple to mine Bitcoins. You could mine a lot of them quickly. Silk Road was, let's say, the first mainstream application of Bitcoin and blockchain. It was a website used for selling drugs that eventually the FBI closed, and the founder went to jail. And years later, a lot of the bad names that all this industry has maybe stems from this single project, even though that once you dig deeper into blockchain, you'll see it's not a very good mechanism for money laundering or dealing with drugs, because every transaction is actually saved forever in an immutable ledger. So it means that if you participated in a transaction that violated some law, even 10 years later, people can still track you if they can only find can associate you with your address, which is actually make blockchain as a payment mechanism very transparent, maybe even too transparent for what it's trying to achieve. So it's counterintuitive, but this is actually the fact that while blockchain and Bitcoin has bad name, it is really not a good idea to try to launder money using Bitcoin. In 2017 was marked by the ICO boom. Again, I guess billions of dollars worth of tokens were sold. Jelurida itself, my company, also raised something like $15 million during these days by selling what is called the Ignis token. And a bigger cycle actually started at the end of 2020, which drove the value of one Bitcoin to $64,000. Now went down a bit, but a lot of financial institutions are now looking more seriously at Bitcoin. Okay, if this is another good point for questions, if someone wants to. Okay, fine. So, few words about the project Jelurida is developing. It's called Ardor. Ardor is a blockchain product that, unlike Bitcoin, is focused more on applications beyond simple payments. All the topics I mentioned earlier, the decentralized autonomous organizations, the ICO, initial coin offering, non-fungible tokens, financial applications are all things you can implement using Ardor. It was launched more than 3 years ago based on a previous project called NXT, which used a consensus mechanism that does not waste energy, called proof of stake. Ardor is already taking the blockchain to the extreme. It's no longer a single chain, it's a multi-chain architecture, which gives you better scalability. It also lets you to do some kind of permissioning on top of a decentralized application, a decentralized protocol. So the transaction verification is decentralized, but some applications still need to be permissioned, because for many applications, you just cannot let anyone use the application without any sort of permission. So we have kind of hybrid solution for that. And Jelurida is a development company behind it. So we pretty much spoke about blockchain, how it works. We spoke about Bitcoin, which was the first implementation of blockchain, possible applications of blockchain, a little bit about the Bitcoin history, and Ardor, our project. Now let's do a big switch and talk a little bit about what it means to use this, to work on blockchain these days, to operate a blockchain startup. Yeah, so I call it blockchain entrepreneurship. Okay. First of all, you need to understand that blockchain is a huge industry. This is not something niche or esoteric anymore. there are thousands and thousands of cryptocurrencies. Some are good, some are bad, some use very interesting technical features. Some put a lot of emphasis on marketing, on distribution to many people. They come in all shapes and forms, including nonsense coins, and there is billions of dollars in daily trading volume of these tokens. The whole thing is traded 24/7, 335 days. The blockchain never stops trading. Trading can be done using exchange websites, which are external entities that are centralized and used to trade tokens, or using decentralized trading by trading tokens on the blockchain itself, which is very typical for DeFi applications. Anyway, this whole industry operates all the time around the clock. The clock never stops. There are services like miners focused on generating blocks and verifying transactions, getting block rewards in return, exchanges used for trading, and many other things built on top, like options and loans, and multiple service providers that track this industry and rate this industry and track the progress of the blockchain, and provide various endless services to all this operation. Many speculators. I think that most of the traders on blockchain are speculators, speculating that this will become more and more mainstream. Money of the internet of money, much fewer actual applications these days, while lots and lots of development. Mainstream applications are still rare and hard to find. It's also creates a lot of friction here because it kind of reminds the early days of the internet, where some people actually saw the potential, but what you could do actually is not much more than check the NBA results before they're written in the papers or things like that. Now, dealing with crypto is very difficult. Well, buying crypto is relatively simple. You can send your money to one of the exchanges, buy crypto, and so on. Getting back from crypto to fiat money, to normal money, is much more difficult because once you got into cryptocurrencies and blockchain, you are a suspect. Okay, you have to prove that you are clean, because everything in this wonderful new economy is suspicious to the authorities, sometimes for good reason, sometimes not really, but you're always a suspect. Another huge challenge is how to keep your crypto secure, because if you keep your tokens yourself in your wallet, then you need to keep the private key. Otherwise, you'll never be able to use it in the future. You forgot it, you lost your hard drive, it's gone. Okay? Someone actually hacked you and stole your private key, it's gone. And you can store your cryptocurrencies on exchanges, but the exchanges are very big targets for hackers. They also get hacked from time to time, and then good luck getting your funds back. It still requires quite a lot of technical skills to manage your crypto without being hacked or losing your crypto. And if you're dealing with a large amount of crypto, get ready to deal with accountants and lawyers and bankers, regulators, tax. Of course, scammers and hackers, which are a huge problem in this industry. it is very, very profitable to hack cryptocurrency users. The chance of you getting prosecuted is minimal, and the rewards are very lucrative, unfortunately. As an entrepreneur, what you should expect. So you should expect to operate in regulated environment that is not very clear, and sometimes it's completely absurd. I can give you, for example, that the Israeli authorities require you to report, even if you are trading crypto to crypto, like you're buying Ardor with Bitcoin, you still need to report your profit to the taxable profits and pay taxes on them in Israeli shekels, okay, which is quite a challenge when you deal with tokens that can go up 10% one day and down the other day. It's almost impossible. And you're always a suspect. I mean, everything that you do that is inside this cryptocurrency economy is always suspected as something illegal, or and you always have to prove that you are honest somehow. And seriously, it's not always even possible, especially when you operate over long periods of time with software that is sometimes no longer maintained, or exchanges that come and go, and so on. And everything you do today will be judged years later in retrospect. Okay, I mean, you can buy some crazy token today that nobody cares about, but maybe in a few years it will have a value of millions, and then you have to explain exactly which money you use to buy this token, because maybe this money was before used, even if it was $100, maybe it was used as drug money before. See, things that are sometimes so absurd that you can see my gray hair. Yes, and then as an entrepreneur, the crypto investors and speculators always looking at the developers to get a hint how to move forward. To get a hint how to move forward. And on one hand, you can say whatever you like. You can say, my coin will go up in value 100 times, okay? Because you're not like a CEO of a public company, on one hand. On the other hand, it is very likely that in the future people will blame you that they bought this cryptocurrency because you said it will go to the moon, and then you disappeared with the funds, and nobody can find it. So you have to be very careful with what you promise and what you say. Then you have to choose very wisely the place where you do business. Assuming that you need to operate a business, hire employees, pay salaries, and so on, you need to register a company somewhere. And this industry is very, very global. Blockchain is completely global. Everybody can, it's decentralized. People from all over the world can use it and will use it for sure. So it's very important that you operate from a place that understands the needs of blockchain. For example, that if you raise money by selling tokens, you can register this as investment and not immediately pay half of it as taxes. Places where you can actually open a bank account for your company, and so on. And then not only that everybody suspect you, and you always need to prove that you are honest and work by the rule. If you yourself is the victim of some hack or some crime, there is almost no way to get help from the authorities. I mean, someone got your private, hacked your computer, got your private key, you can go and report it to the local police, okay? But the hacker maybe came from likely came from a different country. Now go find a way to start an international investigation. It's only if really millions or dozens of millions were stolen, this will even become possible. Otherwise, people would, police would just tell you it's not interesting. I mean, for you it will be very interesting, but not interesting enough to start an international inquiry. So this is a bit of a rant about how difficult it is to do business in this industry. Yep. Then blockchain on one hand has a very deep technology that can go, that you can learn for years and still learn new things, that there are new mechanisms coming almost daily with new ideas. It's fascinating. But most people just buy tokens to speculate, and they don't understand or won't even have the capacity to learn everything. So, so the crypto currency traders, developers, entrepreneurs form kind of communities that try to promote their products. And then when you manage such community, you always have to deal with pissed off people, because many people only care about the value of the token. Of course, if it went up, they will never blame you. But if it goes down, it's always because of something you did or you didn't do, and so on. So you always have to deal with frustrated people. And people always complain that you're not doing enough, even if you're investing hundreds of thousands of euros each year in marketing. People will always tell you you're not doing enough. And when you do something, they will always tell you that this is dumb or childish, or you're not professional, and so on. And then, after you spend several years entrepreneurship in blockchain, comes someone like Elon Musk, okay? One of the richest men in the world, and decide to promote a joke project that nobody cared about. And then you suddenly see the Dogecoin cryptocurrency becoming worth billions of dollars without any reasons or substance, where everybody understands this is just a joke. But I guess this is what the market this is the cards you are being dealt. You have to live with it. A little bit marketing advice on what you should do. Okay. One thing that I really recommend is, when you want to market in this space, in the blockchain industry, you have to be public. You have to become like an opinion leader. You have to be someone that people will know you, because again, many of these people, you want them to buy and invest in your project, but many of them does not have a clue. So you need to explain what you're doing. And the best way to explain is on social networks, using blogs, using videos, but make them short, because the attention span of people is becoming shorter and shorter. You need to get a PR company, otherwise cryptocurrency magazines, which are, so many of them will never write about you, even if you're developing the coolest projects in the world. nobody will know about it. On the other hand, you need to be very careful not to overpromise, for example, because it will get back to you years from now when you don't deliver. And another huge problem is when you start using celebs to promote your cryptocurrency, which is always a red flag that you don't really have some good technology. Yep. So this is what I had to tell you today. I hope it was interesting, and if you like to ask, now it's a good time to ask questions again. So thanks for anyone who made it so far.
Thank you, Lior, for the presentation. Yeah, if anyone wants to ask anything about cryptocurrency, about Lior's specific experience, we will be able to stay a few more minutes.
So was it overwhelming, or it was too simple, or what? Or it's all understood, or nothing is understood?
So we have some comments on the chat, but the succession and people thanking you. So if there are no questions, I'm going to stop the recording right now.